US authorities have begun the year with a crackdown on crypto companies and their products at such a pace that executives fear the industry is being pushed out of one of its biggest markets. In recent weeks, US regulators, led by the SEC, have fired off a series of enforcement actions against some of the biggest digital asset companies and their tokens. At the same time, many of the banks on which these companies rely for payments and custody of assets are also coming under fresh scrutiny. The newly forceful approach has hit a crypto industry still reeling from a bruising year of plunging prices and a crisis of confidence that led to the collapse of some of the sector's biggest players, including Exchange, FTX, and lenders Voyager Digital and Celsius Network. Observers say the spate of actions amounts to a coordinated effort to rein in an industry that until now has largely existed outside the strictures of traditional financial regulation. Since the start of the year, the SEC has sued lender Genesis and exchange Gemini for failing to register a crypto lending scheme as a securities offering and ordered a rival exchange Kraken to discontinue a scheme that the regulator said offered more than 20% returns to customers. Tightening their grip further, the SEC proposed on Wednesday, the 15th of February 2023, tougher safeguards around investors' assets after the collapse of several high-profile crypto companies last year, 2022, revealed that customers' funds were not as safe as had been advertised. Key crypto advocates argue that a heavy-handed approach risks stifling innovation in the industry by leaning too heavily on regulation by enforcement rather than creating a bespoke crypto regulatory framework for the industry. This type of regulatory uncertainty will ultimately drive us access to crypto innovation and jobs overseas, where customers aren't guaranteed the same level of protection, according to Paul Grewal, Chief Legal Officer at Coinbase. In the meantime, America and Americans are getting left behind. But John Reed Stark, former chief of the SEC's Office of Internet Enforcement, said the agency's approach was consistent with how it handled rule breaking in traditional finance. This regulation by enforcement phrase is just a crypto catchphrase designed to obfuscate and deflect, according to him. There's no insider trading statute. There's no derivatives fraud statute. It's a framework intended specifically to be specific. In a further escalation of the regulatory bleeds, New York authorities have taken aim at one of the biggest so-called stablecoins, dollar-pegged tokens that act as a crucial entry and exit point for investors in cryptocurrencies. The New York Department of Financial Services this week, that is the week from the 13th of February to the 17th of February, shut down the issuance of BUSD, the stablecoin widely used on Binance and which carries the branding of the world's largest crypto exchange. Following the order, the amount of BUSD in circulation fell by about $1 billion in a matter of days as investors shifted their cash elsewhere. The US's crackdown on crypto has become far more aggressive than what we have seen from regulators in many other jurisdictions, according to Ilan Solot, co-head of digital assets at Marex Solutions. There are also signs that US regulators are turning their attention to the links between the world of crypto and the traditional financial system. The US Federal Reserve last month, that is January of this year, 2023, rejected an application from Custodia Bank, a crypto-focused institution, to join its payment system because its planned crypto activities are highly likely to be inconsistent with safe and sound banking practices. Silvergate, another crypto-focused bank, faces scrutiny from US legislators for its role in providing services to the FTX. Mainstream lenders may increasingly look to sever ties with the crypto world to head off any potential regulatory difficulties, according to lawyers. If you've got a bank which is being supervised in the US and the Fed questions the exposure to crypto industry, that can trigger some serious evaluation internally at the bank, according to James Gregg, a partner in financial regulation at law firm Adel Shaw Goddard in London. It's a nudge rather than an enforcement action. Binance this month, that is February of 2023, suspended US dollar payments without providing a reason. One of its banking partners, Signature Bank, had previously said it will no longer allow crypto exchange customers to buy or sell amounts of less than $100,000. Signature is a member of the federal scheme that issues deposits held at the nation's lenders. In a question and answer session on Twitter this week, Binance chief executive Changpeng Zhao said it was likely that banks had been asked by regulators to either not work with crypto businesses completely or be very cautious about working with crypto businesses. But whether enforcement is direct or indirect, industry insiders said they could already feel the chilling effect of the recent regulatory crackdown. So the spate of enforcement actions are a coordinated attempt to rein in a scandal-hit industry. Okay, so U.S. regulators turn eagle eye on digital assets. This video is reliant strictly on the publication of on the Financial Times on Friday, the 17th of February 2023. And thank you very much for watching this video.